What's going on, everybody, and welcome back to Exploring Investments with Justin. In today's video, I'm going to be covering DraftKings because this has also been a popular stock, just given their recent IPO and how much it shot up over the past 3 months. So let's not waste any more time and let's jump right into who they are. So DraftKings is a digital sports entertainment and gaming company that provides online and retail sports betting through daily fantasy sports, online betting, and online casino games like virtual slot machines. So in April of this year, DraftKings was able to go public by merging with a blank check company, and they closed their first day trading under the new ticker symbol at $19 a share. And if we look at their stock price over the past month, it's gone up a ridiculous amount, shooting up over 100%. And if you think that's crazy, then look at their 6-month stock performance. It went from a $10 stock to a $40 stock and has gone up over 300%. Now there's definitely some reason behind this, so it's not like this stock just shot up for no reason. Now they are the leading sports betting company since they are able to provide the convenience of placing bets directly from your phone and have shown massive growth since they first launched back in 2012. We can see here that in 2012 they only had 100,000 registered accounts, and in 8 years have grown that to 12 million accounts. So the number of registered accounts has grown significantly over the last several years, and I personally think it will continue to grow as sports betting becomes legal in more states. And over the last 8 years, they've hit some pretty big milestones, with 2016 being the year that they became the #1 provider in sports betting by number of users and revenue. And in 2018, they launched the first online sports book in New Jersey, which has opened the doors for several other states to legalize sports betting. Now, if we look at where the company stands today, given the global issue, they did report Q1 revenue growth of 29% year over year, coming in at just over $88 million. Now, they did take a loss of $68 million, but we can see that they did reinvest significantly more money into marketing, product, and technology than they did in Q1 of 2019. And from a balance sheet perspective, they will without a doubt be able to get through this period of no major sports, given that they have over $400 million in cash with absolutely $0 in debt. And on top of that, they are minimizing their monthly burn rate to just $20 million while major sports are suspended, which is enough to get them through easily this year without using even half the cash they have on their balance sheet. Now, if we look at the growth moving forward for this company, I definitely think it was a smart move for them to expand their gaming segments into esports, given the global issue and the fact that traditional sports like football and basketball are all non-existent right now. So we can see here that they recently launched new content areas for betting in video games like Counter-Strike, Call of Duty, Madden, and Rocket League. And for those of you watching that aren't gamers, those 4 games have a combined 120 million people who play every single year. And the global number of viewers that are either gaming enthusiasts or occasional gamers that watch esports has been growing at around 16% consistently, and this number is expected to grow to 645 million by 2022. So there is definitely a market to be had when it comes to esports betting. And on top of that, in 2019, DraftKings signed a partnership that would make them the official daily fantasy partner of the NFL. So I definitely think there's plenty of growth ahead for DraftKings. Now, with the massive rise in their stock price over the last 6 months, this has of course dramatically increased the valuation of the company. So if we go just back 6 months ago, they were about a $3 billion company. Now they're almost $15 billion. So we have seen their valuation kind of go up pretty drastically over the last couple months. So obviously future growth is being priced into the stock, but I do think for good reason, because executives from MGM Casinos and Hard Rock are expecting the sports betting industry to produce more than $8 billion in revenue by 2025. So there is definitely more room for this industry to grow. And to be honest, DraftKings is the go-to company when it comes to sports betting because of the convenience and easy user interface that they have on their website and mobile phone apps. The only risk I see when investing in this company is more of a short-term risk, because right now gambling is only legal in 17 states, but there are another 17 states with active bills to legalize sports betting and another 5 that have passed bills to legalize it. So I do think sports betting will be legal in all 50 states at some point. It's just more of a matter of when. So personally, I would like to see DraftKings valuation come down a little bit. And if they were to drop to maybe $20 a share, then I could see myself starting a position in them. But at these values, I don't really see it as a good investment right now. And make sure that as an investor, you know what your time horizon is. Because if you truly believe DraftKings will be a $50 billion company in, let's say, the next 5 or 10 years, then at these prices, this is a steal. So as always, make sure you know what your time horizon is for all of your investments. And with that being said, I just want to say thank you guys for watching. I really do appreciate all of the viewers and subscribers. So be sure to let me know in the comment section if you want me to cover a specific stock. And with that being said, thank you guys, and I will catch you guys on the next one.